Good afternoon from the floor of the CME. This is Chris Robinson with your Traders Exclusive Comment today. Here we are, Thursday the 12th, a long-awaited USDA report. Kind of more of a whimper than a real bang. The big surprise, I think, was the adjustment they made in acreage for soybeans. They dropped it by about 300,000 from 83 million, down to 82.7. That was the number one issue, I think, that caught the market. And again, these are numbers I'm just looking at. The number was released just a couple hours ago. So that was it. Harvested acres was a surprise. And also the carryout, they dropped it slightly. So long story short, it was friendly for old crop soybeans. You saw a good 20-cent move there. Everything else was pretty neutral to slightly bearish. Worldwide production and stuff like that. Again, you can go through and dig into these numbers. What did the market think? Again, old crop soybeans rallied. That was in keeping with the fact that the funds were long soybeans. They continue to be short wheat and short corn. Nothing really outstanding to talk about in the report other than the fact that it was a little friendly for soybeans, both because they lowered the acres and they lowered the carryout. So worldwide, nothing really astounding there as well, and the markets kind of reflected that. You had corn down about 2-3 cents. I would continue to be worried if I was a producer, didn't have some downside protection. I think rallies are rallies that you need to sell because there's a lot of corn out there. Farmers are long the corn in the bin, plus they're long what they're going to plant next year. One bright spot, I'd say, was the change in acres for planted winter wheat. It's the least amount of winter wheat, second lowest we've got on history since World War II in any event. Second lowest acres of winter wheat planted. Well, why wouldn't farmers plant less wheat when you've got prices, near 10-year lows, 12-year lows? That's not surprising. Could it be friendly down the line? Let's hope so. The wheat market is still fighting the good fight against the recent 4-year highs in the US dollar. That's going to continue to weigh on all of our commodities. But long story short, USDA, I think the only bullish thing out there was old crop soybeans. Everything else was, well, we did get a little bit of a bounce in wheat with these acres numbers. I think all in all, how we settle Friday is going to be more interesting than how we are trading here today. And certainly when we come back after the long weekend, you got to remember Monday we have a holiday where we'll open up on Tuesday and see how we trade. Switching over real quick to the livestock. Livestock looks like it may have finally run out of gas. Funds are still long, about 100,000 contracts of fat cattle, but we started to roll over a little bit here today. I'd be careful if I was long cattle here without some sort of escape route down below. That's about it. If you're looking for help with your trading or with your hedging, give me a call, Chris Robinson. Have a great day.